Good evening. I will call this meeting to order for Tuesday, April 21st, 2026. In the spirit of truth and reconciliation, we acknowledge the town of Edson is located on Treaty 6 territory, the traditional and ancestral lands of the Niqawak, Saulteaux, Siksika, Piikani, Kainai, Dene, Dakota Sioux, and the Apitimisawak Métis Nations. We honor the knowledge of this land, the elders and youth which gather here, and our ancestors who have gathered here for centuries. Can I get a motion, please, for the adoption of the agenda? Go ahead, Councillor Wilson-Lear.
I move that the agenda for the April 21st, 2026 regular meeting of council be adopted as presented.
Any questions, comments, or concerns? Seeing none, all those in favor? That motion is carried unanimously. Can I get a motion, please, for the minutes of the April 7th, 2026 regular meeting of council? Councillor Schramm?
Yeah, I move that the minutes of the April 7th, 2026 regular meeting of council be adopted as presented.
Thank you, Councillor Schramm. Any questions, comments, or concerns with said minutes? Seeing none, all those in favor? That motion is carried unanimously. We have no public hearings, no presentations and delegations, no bylaws. We do have some business items this evening. Moving on to item G. The first is Youth Week Proclamation being presented by Nicole Tarves, our Community Development Coordinator. Welcome, Nicole.
Good. All right. Well, thank you. Good evening, Mr. Mayor and Council. Thank you for having me here tonight. My name is Nicole Tarvis. I am a Community Development Coordinator with the town, and I am here to present about the Youth Week Proclamation, RFD. All right, so Youth Week, a little overview. It is an opportunity to recognize and celebrate young people. It highlights the positive contributions they make to our communities and focuses on youth leadership, well-being, and engagement. Youth Week in Edson would be led by the Edson Youth Interagency Committee, also referred to as YAA. This is their first time hosting these celebrations in town, and the celebrations are scheduled for May 1st to 7th, 2026. It's a community-wide celebration involving multiple partners, and most of the activities are geared toward youth ages 11 to 17, although there are a few that are geared toward older teens, like grades 10 to 12. Throughout the presentation, too, we have a few images of youth interagency trips that we've been on. And so here we have curling and piers just a couple months ago. Youth Interagency Committee represents a strong collaborative network of youth-serving organizations. We have representation from the town of Edson, Yellowhead County, Primary Care Alberta, and our local school divisions, as well as a lot of our recreation organizations in town. Over the last few months, we've experienced significant growth. And our group shares a collective vision for supporting youth in Edson. So one of our core values is leadership, another one is respect, responsibility. The goals of Youth Week are to celebrate and uplift youth voices, just showing youth that they're valued members in our community. We aim to promote youth leadership, wellness, and connection, and raise awareness of youth-focused programs and services available in our community. Community collaboration and municipal support. Youth Week provides an opportunity to strengthen collaboration with our community partners, create new partnerships, celebrate our youth, and share our collective vision with the broader community. So far, administration has supported planning and coordination of Youth Week, scheduling the activities, and promoting the events. So we have a little glimpse here into the Youth Week activities we have planned. And since this was shared with council, we have created a few new partnerships of different events that will be added to the schedule there. So lots to look forward to. The purpose of seeking this municipal proclamation is to formally recognize Youth Week in Edson. It helps us raise awareness of Youth Week activities, the role of youth interagency in our community, and the youth-focused programs, services, and opportunities that are available. By doing so, the town of Edson would affirm their commitment to youth engagement, development, and well-being. So in closing, our recommendation is that council proclaim the week of May 1st to 7th, 2026 as Youth Week in the town of Edson. Thank you for listening, and I'd be happy to answer any questions.
Thank you, Ms. Tarvis, for your presentation this evening. Council, do you have any questions or comments for Ms. Tarvis? Wilson-Lear.
Through the mayor to Ms. Tarvis, our presenter, and the rest of council, I want to extend my sincere thanks to you and to the members of the Youth Interagency Committee. It's important to recognize that their work ensures our youth have consistent access to mentorship and a safe place to learn and be heard year-round. Beyond the committee's work, I want to speak to the amazing youth in our community. We see your achievements in your schools, your leadership, and on the field of athletics, and your creativity in our arts programs, contributing to making Edson a better and welcoming place to live. My hope is that through initiatives like Youth Week, you feel a lasting connection to this community. We don't just want you to be active today, we want to encourage all youth to stay connected as you grow. The goal to build a foundation where your current energy evolves into potentially lifelong passion for participation and for community service, and maybe even forming the next generation of our town's volunteer base. By supporting this proclamation, we are investing in the leaders, coaches, and volunteers of not only today, but of tomorrow as well. And I am proud to support this motion. So thank you very much.
Thank you. Councillor Taylor.
Through the mayor to Ms. Tarvis, thank you for bringing this forward to us. Just a quick question, are you looking at involving our youth council at all in any of the activities and looking at leadership throughout the week, and have you communicated with them at all?
Go ahead, Ms. Tarvis.
Sure. So through the mayor to Councillor Taylor, yes, Youth Council is involved. They'll be doing in-class presentations for grade 8 and 9 students in our local junior and senior high schools. So it's just a short 10 to 15 minute presentation that the youth counselors have prepared, and they're just going to share about what it's like to be a youth counselor, some of the highlights they've experienced, and the process to become a youth counselor. So these could be the next generation of youth counselors.
Thank you. Any further questions or comments for Ms. Tarvis? Seeing none, thank you very much for your presentation. And once again, a big thank you to Youth Interagency for their incredible work in our community. They've been around for a long time and have formed some fantastic partnerships. So thank you. Council will take a motion from the floor, please. Go ahead, Deputy Mayor Fogarty.
I move the council proclaim the week of May 1st to 7th, 2026 as Youth Week in the town of Edson.
Thank you. Any questions, comments, or concerns? Seeing none, all those in favor? That motion is carried unanimously. Thank you very much. Next up, just as we complete 2026, we move on to 2027 budget process, and we are pleased to welcome our Chief Financial Officer, Denise McDonald. Go ahead, Ms. McDonald.
For you tonight, before you tonight is the budget 2027 budget timeline and process. Just to give you a little bit of background on requirements for the budget, council is required to adopt an operating budget and capital budget annually. Budgets must provide for programs and service delivery, debt servicing, other legislative financial obligations, transfers to and from reserves, and to the capital budget. The operating budget must be balanced or have a surplus. Capital budgets authorize the capital project as well as identify the approved funding sources. Finally, the tax rate and other budget-dependent bylaws, such as fees and charges bylaw, must be passed by council after approving the budget. So this is our budget calendar timeline. The information above the line that is important to council is October 20th, where the capital, at the October 20th council meeting, the capital budget will be introduced to council. And then the following day at 5 p.m., we will have a budget review with council on October 21st. November 17th, the draft budget will be proposed to council with a subsequent date of December 1st in the event that we need a subsequent date for changes. The information below the line are group categories from April 22nd to August 19th is budget entry for our administration. April 13th to May 15th is public engagement focus groups by our contractor for public engagement, Catalyst. And our pop-ups for our comms teams, we are looking at Trade Show April 24th and 25th, Eddie's Big Run May 30th, Seniors Week June 5th, Farmers Market and grocery stores, all prior to ending July 30th. And a presentation of the public engagement will be presented to council on August 18th, and nonprofits will present their requests to council on October 13th. This next slide shows the process, the cyclical cycle of a budget process. So it starts with strategic planning, and that includes the public engagement focus groups from April to May, public engagement pop-ups April to July, and council adopts the strategic plan tentatively in May. Council survey results will be presented August 18th, and the public engagements results August 18th. Part of the budget development process includes budget instructions, strategic plan from council, and CAO directions will be communicated April and May. Budget training will be updated June and July. Salary benefits calculated in July, and internal costs calculated in July. Operating staff and capital requests will be submitted by August 11th to the general managers of the organization, and our budgeting software, Questica, will close August 18th for financial analysis. The presentations and outreach of the budget process include public engagement results August 18th, manager's budget presentation to the senior leadership team September 9th to 11th, senior leadership budget review September 28th to 29th, and the CAO final review October 1st, nonprofit presentations October 13th, capital introduction October 20th, draft budget presentation October 21st, and assessment presentation in March of the subsequent year. When we're looking at adoption, we're looking at the draft budget proposal of November 17th and the revised budget proposal, if necessary, December 1st, and the mill rate bylaw May 2027. As part of the evaluation and amendment process, we have carry forwards that come in January 27, assessment declaration February 27th, spring adjustments April, requisitions will be received April, and the mill rate presentation finalizes the year in May before we start 2028. With that, if there's any questions of council, I have two recommendations. The first one is to approve the budget plan and timelines as presented, and the second one has to do with establishing a budget meeting Wednesday, October 21st at 5 p.m. Here at the Civic Center. Open for questions.
Thank you, Ms. McDonald, for your presentation. Council, open the floor to questions or comments. Concerns? Councillor Schramm.
Yeah, through the chair to administration, thanks for the presentation. A lot of thought has gone into the process that I see here, and it's pretty in-depth. You guys have got a pretty good handle on it. I guess my only caution is there's several new councillors on this, and is one evening budget meeting appropriate, giving enough time to get all the information out for the new councillors? That'd be my only cautionary comment.
Go ahead, Ms. McDonald.
We have added time to it in comparison to prior years in that we are introducing the capital component the night before for consideration, and then it will take less time the subsequent night. So there should be plenty of opportunity from 5 to going through the council, and then it'll be brought back again. There'll be time for you to ponder it, and then we'll bring it back November 17th.
And I'd also comment too that we always have the opportunity to add additional dates. We may not like to do that, but that opportunity is there. And if we run into a situation, we could always pass interim before the end of the year. So There is opportunities, and I know this finance team has worked really hard to provide really good background information as well for council to consider. Councillor Holden.
Yeah, through the mayor to Ms. McDonald, thank you for the presentation. It was very in-depth in a very short way. It was great. To council and administration, just a comment that I was going to make, that any budget moving forward must be considerate of the slow economic conditions and the financial burdens that are being put on the ratepayers of Edson by outside forces, and that our financial prudence is a must going forward. And that's just something that people have talked to me about and asked that we do be prudent in our expenses and spending next time. Thank you.
Thank you, Councillor Holden, and I hope they engage in the budget process to let those thoughts be known. Council, any further questions, comments, or concerns? Seeing none, I will take a motion from the floor. Go ahead, Councillor Holden.
I motion that council accept the 2027 operating and capital budget plan and timelines as presented.
Thank you. Any questions, comments, or concerns? Seeing none, all those in favor? Motion carried unanimously. And can I get a second motion, please? Go ahead, Councillor Taylor.
I move the council schedule a budget meeting on Wednesday, October 21st, 2026 at 5:00 p.m. held at the Edson Civic Center.
Thank you. Any questions, comments, or concerns? Seeing none, all those in favor? Motion is carried unanimously, and we're going to move on to the 2025 consolidated financial statements. And do we need to take a moment to recess to get the auditors online? Okay. We'll start with Ms. McDonald. Go ahead, Ms. McDonald.
If I can ask council's permission, we'd like to move up the historical financial data first presentation, and then we will move to the audited financial statements, if that's all right.
Yep, go right ahead.
Thank you, Mayor and Council. I'd like to introduce you to Kelsey Schmidt, is the acting finance manager. She is going to help me bring forward the presentation tonight. I'd like to note that the data presented in the historical financial data has not been audited and may reflect variations in reporting practices compared to prior years. The purpose of this presentation, despite its limitations, is valuable to review our financial data and trends on a regular basis. This analysis supports continuous improvement in the consistency of our reporting. It enhances the comparability across periods and strengthens our overall understanding of the town's municipal finances. Our first slide is the education mill rate. So this slide compares the education mill rate trends for both residential and non-residential properties from 2021 through to this year, 2026. And I've included 2026 in red on purpose because we know that they're considerably higher for 2026, and I think council would appreciate seeing that information in the graph. Education mill rate for non-residential properties increased 4% over 2021 to 26 period, while the residential saw a 10% increase. However, looking at the changes between 25 and 26, non-residential rates have risen 14% and residential rates 9%. The mill rates are a direct reflection of the changes in assessed property values. The assessments rise. As assessments rise, the rate needed to generate the same revenue can actually decrease, even though the rate itself may appear higher year over year. Overall, when we look at the education requisition dollars levied, the total education dollars increased approximately 20% from 21 to 2026. 26, yes. And the change over that 6-year period is 741,000. However, the last year is 413,000. Our next slide looks at the municipal mill rate. The non-residential municipal mill rate has increased about 7% in the last 5-year period. The residential municipal mill rate has increased 13% in the last 5 years. When we look at the net municipal tax dollars levied, in 2021, it was 12 million, and it increased to 25 at 13.5 million. That's 1.5 million over the 5 years. Note that the leveling off between 24 and 25 suggests stabilization in both assessment growth and rate adjustments. So then our next slide brings in the net municipal property taxes per capita that the Alberta Municipal Affairs puts together. They publish financial indicator graphs that track changes within a single municipality over time while comparing those figures against the minimum, median, and maximum of all municipalities of the same type. The most current data available from Municipal Affairs reflects 2024 as municipalities are working to submit their 25 financial information. The shaded gray area represents a range between maximum and minimum values across all Alberta towns, and the line for the town of Edson sits just above the median for net municipal property taxes per capita. Overall, the trend line has been fairly consistent over the period shown, and there is a noticeable dip in 2020, reflecting the pandemic-related impacts, followed by a steady recovery in subsequent years. The next slide looks at total mill rate. This slide presents the total mill rate inclusive of all requisitions, municipal, education, and Evergreens Foundation, for both residential and non-residential properties. The left axis shows the mill rate value, while the right axis shows year-over-year percentage changes, noting that the residential left axis and the non-residential left axis are different parameters. So the non-residential, if you're trying to compare the two graphs, non-residential is actually higher. The left axis, residential, the left graph, the total residential mill rate increases approximately 10% over the 5-year period. Again, this is the total mill rate. Year-over-year changes, I've included 0% in 2020, it's related to COVID, and then a recovery of 6% in 21, followed by 3% in 22, 4% in 23, 0% in 24, 3% in 25. The first year of 2020 was followed by a stronger rebound, with growth moderating in the more recent years. When we look at the right graph for non-residential, the total non-residential mill rate increased approximately 3.8% over the 5-year period. Year-over-year changes include a 6% decrease from 19 to 20 in COVID, then a sharp 14% recovery in 21, followed by 1% in 22, 2% in 23, 0% in 24. Non-residential rates have essentially stabilized in recent years after the initial recovery. Then our next graph shows our taxable assessment. For the 5-year taxable assessment trend based on assessment values, this reflects the annual tax rate bylaw. This is reflected from our annual tax rate bylaw. So 5-year assessment growth includes residential assessment increased 5.3% over the 5-year period. Non-residential grew significantly more and increased 29.3% over the same time frame. Overall, total taxable assessment increased approximately 14.2% across the 5 years. What drives assessment change? Well, assessment increases are driven by 2 variables: growth, which is new properties that have never been taxed before, and market value increases on existing property. Given the town's limited new growth, most of the assessment increase is attributable to rising market values rather than new development. The assessment values rise. As assessment values rise, the mill rate needs to generate the same tax revenue can decrease. The municipality is mindful of this relationship and each year administration calculates the actual tax dollar impact to both residential and commercial properties to ensure transparency. Assessment composition. So the residential properties make up 63% of the total assessment base. That's down from 66% the previous year. Non-residential properties now contribute 37% up from 34% last year. This shift reflects a stronger growth in the non-residential assessed values relative to residential. Our next slide is on our total property tax dollars levied. All figures on this slide are presented in thousands for clarity and visual consistency, and it allows larger numbers for more readable font size in the chart. Why have we shown 8 years? Well, this graph intentionally covers 8 years rather than just 5 on purpose. Showing the last 5 years would give a misleading impression of continuous increases. Looking at the full 8-year picture, total property dollars levied actually peaked in 2019, declined through to 21, have not yet returned to 2019 levels. Over the full 8-year period, total property tax dollars levied decreased by approximately 7%. The total tax dollars levied increased just 4% when we're looking at 22 to 25, and I realize that is roughly 1% per year, and we're excluding 2021 as an anomaly year in those calculations. The breakdown by category includes municipal portion decreased $2 million, 13% over the 8-year period, from $15.1 million to $13.1 million. But when we look at the 5-year period, the increase is 16% or $1.8 million increase. Education increased 2% over the 8 years and 3% over the 5-year period. Evergreen's Foundation increased $247,000, which is 2% over 8 years, and the 5-year change is also at 2%. Our next slide shows our major revenue sources and includes both operating and capital revenue. Contributions to and from reserves are excluded. It also shows how the composition of revenue has changed over time. The green section represents net municipal taxes, which decreased from 38% of total revenue in 2021 to 26% in 2025. User fees, shown in the light gray, declined slightly from 18% to 16% of total revenue over the same period. Federal and provincial grants, shown in dark green, increased significantly from 9% to 27% of total revenues. Local government transfers increased from 18% of total revenue in 21 to 24% in 25. The increase in federal, provincial, and local government grants is primarily related to the capital funding received for the YCE multiplex. The federal and provincial grant funding will continue into 2026 until fully expended, and the local government transfers will continue until the project is completed in 2027. Then we'll level out to the cost-sharing agreements. Overall, the total revenues increased from $31.7 million to $52.7 million over the 5-year period, representing an increase of $21 million or approximately 66%. This graph illustrates the composition of the town's other revenue sources. The investment income is the green stack and includes the investment income peaked in 2024, reflecting the strategies introduced under the new investment policy adopted that year, which took advantage of higher interest rates. As the town began spending funds set aside for the larger capital projects, the amount available for investments decreased. Combined with declining interest rates, this led to lower investment returns heading into 2025. Tax penalty and fines. Since property taxes are levied mid-May, a few months into the fiscal year, there's often a shortfall period where services have been provided but tax revenue has not been collected. To support cash flows during this gap, tax penalty strategies were reviewed and introduced in 25. We will monitor the results through to 2026. Business license and permits is the dark gray. This category includes revenue from business licenses under the economic development and permits under planning and development. Permitting activity increased in 2025. The developer levies is the blue stack, reflecting developer levies received in 2022. The next slide shows our user fee and sales of goods, as well as franchise and concession fees. The user fee and sales of goods category includes utility revenues, user fees for town-owned facilities. Over the 5-year period, user fees and sale of goods increased by 2.6 million. Note that some prior year reporting changes may affect the comparability of this figure. When we look at franchise and concession fees include agreements for power and natural gas as outlined in the financial statement notes. These fees have increased 237,000 or 27% over the period, though year-over-year growth has remained relatively flat. On the right-hand side is our per capita comparison from municipal affairs. It is important to examine not only our historical data in isolation, but also on a comparative basis with other municipalities. The municipal affair graph shows that the town's net sales and user charges per capita have historically sat below the median, but reached the median level in 2024. Even though net sales and user charges have increased over the 5-year period, the per capita figures remain reasonable relative to the comparable municipalities. Note the fluctuating upper range across the years, particularly the spikes in 21 and 23, while both the median and the town of Edson's figures have remained relatively stable. Our next slide is on government grants, and it includes operating and capital from all orders of government. The local government contributions represent the largest category, driven by the revenue sharing agreement and cost sharing agreements with Yellowhead County, including their capital contribution for YCE of 4.6 million. For provincial grants, operating grants total approximately 781,000, comprising of the police grant for 366,000, MSI operating grant of 143,000, and FCSS grant of 237,000. The capital portion is primarily related to the YCE multiplex, totaling approximately 4.6 for MSI and 1.4 million on road infrastructure capital. Federal grants contributed, conditional operating grants include smaller allocations under FCSS and community development and economic development, totaling approximately 33,000. The capital component consists of ISIP, which is Investing in Canada Infrastructure Program grant at 6.3 million. Any restatements, just an important note on this data that there was considerable amount of restatements last year for our prior year of 23. Any of those restatements to financial statements are not reflected here, as the data is sourced directly from what we submitted to the provincial government in our financial information return, which cannot be restated after submission. Additionally, we are working towards greater consistency in grant classification. For example, the provincial government administers certain grants on behalf of the federal government, which can create confusion when you're reporting it to the provincial government. Going forward, we want to ensure these are accurately reported as federal grants, such as CCBF, which is the Canada. Yes, is a federal grant, but it's administered by the province. So sometimes it can be reported as a provincial grant when truly it is a federal grant. Our next slide is our major expenses. The salary, wages, and benefits line item continues to trend upward, in part due to negotiated increases with the QP Canadian Union of Public Employees Collective Agreement, which expires in 2026. The municipal affairs comparative data shows the town sitting slightly above the median for the salary, wages, and benefits per capita among comparable municipalities. Contracted and general services spiked in '23, primarily due to the disaster recovery program expenses. Excluding that anomaly, spending has returned to levels similar to 2018 and 2020 period. Like all businesses and municipalities, the town has experienced substantial cost increases across all types of contracted services driven by inflation. The municipal affairs per capita comparison shows a town tracking very close to the median, with 23 spike clearly attributed to the disaster recovery. Materials, goods, and utilities, which include power and natural gas, have increased approximately 38% over the 5-year period, averaging 7.6% annually. The federal carbon tax was introduced in 2019 and continues to increase every year until April of 2025, when it was removed. Despite these increases, the town's per capita spending in this category has remained consistently below comparable municipalities. Just a note on capitalization, in 2023, a greater portion of the capital project costs were expensed in the annual financial statements rather than capitalized as assets. This accounting change impacts both the contracted services and materials and goods and utility line items, contributing to higher figures for that year. The next slide shows our tangible capital assets over the 5-year period. Total tangible capital assets have increased approximately $55 million over 5 years. More than 60% of those assets are consumed. Their useful life has been partially or fully used up based on accumulated amortization calculations. Amortization is not directly funded through taxation. However, it does serve as a useful guide to determine how much the town should be contributing annually to reserves for future asset replacement. This is a critical long-term financial planning consideration. The next slide shows our reserves. It illustrates the town's commitment to building and maintaining reserves over the 5-year period. The gray area represents restricted reserves, which carry a negative balance, and as a result, the total reserve line appears below the gray area on the chart. Reserve growth for total reserves have increased by approximately 11.2 million over the 5-year period, representing growth of 39%. This reflects the town's deliberate strategy to strengthen its financial position through consistent annual contributions to both operating and capital reserves. The reserve balances shown include West Yellowhead Regional Waste Management Reserves, which total $2.6 million in 2025. Accumulated surplus. Accumulated surplus occurs when a municipality's assets exceeds its liabilities. It represents the net financial position built up over time and can be categorized into 3 components. The green is the unrestricted surplus. It represents the cumulative excess of revenues over expenses across all prior years. The gray area, our reserves, includes both restricted and unrestricted surpluses that have been set aside for specific future purposes. Blue is our equity in TCA, and it represents the net book value of tangible capital assets, less any related long-term debt and retirement obligations. On the right is our net accumulated surplus per capita from municipal affairs, and it measures the total financial assets, both cash and non-cash, available per person to support the delivery of future municipal services. The town of Edson is positioned well above the median, reflecting a strong overall financial standing relative to comparable municipalities. Our next slide is the long-term debt. The debt limit is calculated at 1.5 times revenue, less capital grants received from federal and provincial governments. As the town revenue has grown, the debt limit has increased accordingly, rising approximately 33% over the last 5 years. The red line is the 75% threshold of total debt limit. Borrowing above this level requires additional financial analysis and justification to support the request. Debt utilization is the blue stack. The blue stack shows the percentage, is the blue line. The blue line shows a percentage of debt limit currently being utilized. This metric is particularly important as the town is planning borrowing for future infrastructure and capital projects. The debt service limit is calculated at 0.25 times revenue. The town's current debt servicing cost represents 12% of this limit, indicating significant remaining borrowing capacity. Our final slide looks at the long-term debt per capita. This data is provided by Municipal Affairs and reflects the most current figures available, which was 24. The town's long-term debt per capita has been declining over the review period, reflecting the ongoing repayment of existing obligations. This downward trend demonstrates responsible debt management. The town of Edson's debt per capita sits very close to the median among comparable municipalities, indicating the town's borrowing levels are in line with peer communities, maintaining a balanced approach to leveraging debt for capital investment. With that, I'll pass it back to Mayor and Council for any questions on the historical data.
Thank you, Ms. McDonald, for your in-depth presentation. Council will open the floor to questions, comments, or concerns. Go ahead, Councillor Holden.
Through the mayor to Ms. McDonald, yes, it was an exciting presentation. Those numbers always do it for us, I guess. My only question was, in 2025, it looked like we were $2.4 million in unrestricted reserves. We were in a negative balance at that time. Are we in a position that we're going to be able to recover that and get into a positive growth moving forward, I guess, is kind of what I'm asking, if that's...
Through the mayor, thank you, Councillor Holden. Your question is regarding the negative balance in the offsite levies? This one? So it's the gray area that shows up, so the total reserve line shows below that because it's negative. Many municipalities have this situation where we have collected a certain amount of offsite levies and used that reserve into the negative in order to develop certain areas of the community. As those areas sell, that reserve will be replenished over time.
Councillor Holden, do you know anybody wanting to buy some lots in Hillendale?
That was going to be my comment. Thank you, Mr. Mayor, through the mayor to Ms. McDonald. Yes, that's a very good explanation, and thank you for that.
Council, any further questions, comments? Councillor Wilson Lear, who's also celebrating her birthday today.
Old lady, 30th, that's right. Through the mayor to GM McDonald, thank you so much for your presentation. I just wanted to make a comment first that historical data is so helpful as we speak about being new councillors, and as Mayor Zahara has talked about the proverbial fire hose pointed at our heads in the first few months. So seeing where the comparables over other municipalities and stuff is just so helpful, and I appreciate that presentation. I just wanted to ask, as Councillor Holden was talking about reserves, just utilities, and I just want clarification for myself, is utilities are self-supporting. So any surplus in utilities, does that go into reserves, and are they into specific reserves? Mm-hmm. So, and what are those? That's basically what I would...
Okay, that through the mayor to Councillor Wilson Lear. I believe your question will be answered when we see the audited financial statement, but yes, environmental services are utilities, is what they're called when we report them to municipal affairs. And any surplus from that area goes into their specific reserves. So we do have a separate operating reserve for that, as well as a capital reserve for that. And you'll see that detail when we look at the audited statements.
Thank you. Council, any further questions, comments, concerns on this presentation? Councillor Fogarty.
Through the mayor, my question would just be about the mill rate, the municipal mill rate in particular. How closely aligned is that in terms of percentage increase with overall inflation during this time?
Thank you, through the mayor to Councillor Deputy Mayor Fogarty. I can do a quick little calculation here. I'm not sure if I can do that. Yes, I can. I could do it by dollars levied, if that's all right. Can't find my calculator over there.
And I
0.6% is the calculation over the 5-year, average over the 5 years.
That would be, sorry, through the mayor, that would be the mill rate increase,
That would
about
be the,
2.6? So that's going to be below the overall inflation in the economy. Okay, thank you.
so, just to clarify, thank you for the question. That is increase in the dollars levied, not the mill rate,
Okay,
because they calculate differently.
okay.
thank you.
Thank you. Any other further questions, comments, concerns? So through Mix McDonald, when I looked through the graph, I was a little surprised the sharp decrease from 2020 to 2021 and our slow recovery to that number that we seen in 2020 of 19.4 million. I do believe, if my memory serves me correct, we did adjust some of our costing from taxation over to utilities, which may have adjusted those numbers. So it may not give a clear indication of actual total revenues that were generated as we moved recycling garbage out of taxation directly onto utility bills over that time through new agreements and that sort of thing. So just something to keep in mind when you're looking at those numbers, that we didn't see that big of a gap of a tax decrease within the community because that money got shifted into other areas.
Okay. Thank you for that comment. It's hard to go back. I really want to go forward and have the numbers that we are familiar with.
Yeah.
It's hard to go back when we weren't here to understand the significance of transactions.
Yeah, 100%.
Thank you.
All right, council, I'll take a motion from the floor to accept the historical financial data, please. Go ahead, Councillor Pasichny.
I'll move that council accept the historical financial data for 2020 to 2025 as information.
Thank you. Any questions, comments, or concerns? Seeing none, all those in favor? That motion is carried unanimously. I think we're going to move on to the audited consolidated financial statements, and we may need to take a recess in order to bring them online. Okay. I'm told we are good to go. As soon as Ms. Schmidt joins. I'm excited. It's so early to be doing this year. Great work by our team. All right, back to you, Ms. McDonald.
introduce them. Yep. I'd like to thank you, Mayor and Council. Before you tonight, I'd like to welcome MNP as our auditors for the 2025 audited financial statement. I'd like to, well, let them introduce themselves maybe. I'll pass it on to Benji, who is the partner in charge of the audit, Benji Wazer.
Sure, thanks. So yes, my name is Benji Wasser, and I am based out of our Leduc office. I'm the partner on the engagement, and this is our second year doing the audit. I'll pass it over to Callie.
Hey everyone, I'm Callie Withers, and I'm the senior manager working on the audit. Also work at the Leduc office alongside Benji.
Hey everyone, my name is Neil Sigwa. Also work out of the Leduc office, and I was the senior accountant for this year's audit.
Thank you. With that, I think I'll ask Kelsey to share on the screen the audited financial statements, and I'll walk you through our comments. There'll be some areas where Kelsey's going to jump in and help me out. So before we begin our overview of the financial statement, we'd like to draw attention to the fact that the Town of Edson's financial statements are presented in consolidation format. This is due to our partnership with the West Yellowhead Regional Waste Management Authority. As a result, 20% of their financial statements, 20% of the financial statements of this organization are used to record the representative portion of the town's partnership. With that, we'd like to move on to the financial statements. And so we will look at highlighted sections and that we have determined to be of interest to council and the public. And we will have Kelsey walk you through the highlights, and I will speak to the details on that. And I will pause at the end of each page for questions if you have any, and for the time is of the essence, feel free to just jump in and ask a question. The first two pages are just letters. We won't go into the detail. This year, we've added a table of contents. And then the first page of importance is the consolidated statement of financial position. This is otherwise called the balance sheet and shows the accumulated financial position of the organization at a point in time. It reflects the cumulative result of all past financial activity, not just the current year. It answers the question, what does an organization own? What does it owe? What is the net position as of that date? The balance sheet includes assets, liabilities, and accumulated surplus, which represents the net result of all prior years' operations and investments. Deposit liabilities are a change in the deposit liabilities reflects the cleanup of older deposits from prior years. Through collaboration with our planning department, a majority of this cleanup was representative of development security deposits that have been deemed to have met conditions of the permit and therefore deposits returned. Many were resolved in 2025, with more expected to be resolved and released in 2026. I'll pass. The other item is long-term debt that we've highlighted here. You can see that the pay down was slightly over $1 million in principal. And then I'll pass it on to prepaid expenses on to Kelsey to go through the details on that one.
Can I just pause? Sorry, I'm going to just jump in. If we can just back up, I see accounts receivable are up by $2.4 million from 2024 to 2025. What would that cause be?
Thank you for the question. We are going to that detail a little bit later in our presentation.
Excellent, thank you.
So the prepaid expenses have increased as a result of both operating and capital expenditures. The operating prepaids have increased by $750,000 as a result of three things. One, improvements made to the year-end processes that have caught and correctly recorded additional prepaid expenses. Approximately $280,000 of this increase is representative of insurance prepaid amounts, as our policy period now runs from November 1st to November 1st, which basically means we pay for the entire year of insurance in November, but only 2 months of that is getting expensed in 2025. The remainder will sit in prepaid expenses and be expensed in the subsequent year. And then approximately 475,000 of the operating increase is representative of a multi-year government frameworks project initiative. Additionally, there is $1.74 million of capital expenditures included in prepaid expenses related to the aerial fire truck. This is classified as a prepaid rather than work in progress within the tangible capital assets, as this is not something we are constructing, but rather just making payments towards an item. So it's included in the prepaids here, which is a little bit different. I'll pass it back to Denise to continue on.
Thank you, Kelsey. You'll note that there are two items on the bottom of the balance sheet here, contingencies and commitments. This disclosure notes are in our financial statements, and the bottom of the sheet, it's included at the bottom of the balance sheet to note that the contingencies and commitments exist. This note flags for the reader that there are important items not fully shown in dollar amounts on the balance sheet itself, and reminds the reader to fully understand the financials position these related notes should be reviewed. We will look at those notes in detail when we get to those notes later on. So then the next statement is the Statement of Operations and Accumulated Surplus, otherwise known as the income statement, and it shows the financial transactions for the current calendar year. It summarizes revenues earned during the year and expenses incurred during the year. It answers the question, how did we perform financially during the year? The income statement does not show overall financial position, only annual activity. The budget presented in the financial statements is the original budget approved by Council November 13th, 2024. Throughout the year, Council approves a number of budget changes, including carry forward, spring adjustments, motions of Council, adjustments made as part of setting the mill rate. As a result, the budget shown in the statement does not reflect all in-year amendments. Where these changes are significant or provide important context, we will highlight and explain them to you tonight, as well as our readers. For user fees, this item includes values from the consolidation of the town's share of the West Yellowhead Regional Waste Management Authority, a totaling $1.45 million, therefore presenting the revenues as over the budget amount. Otherwise, revenues in this category were fairly consistent with budgeted expectations, with some minor fluctuations that may have been taken into account to improve our upcoming budget process. One noticeable decrease from the prior year was a decrease in offsite levy revenue of $815,000. Under investment income, strong investment planning in prior years generated an average return of 4.67%, while slightly lower than the last year due to rate changes and capital spending. Results remain solid, and the reported figures exclude grant-related investment income that was required to be returned to those programs as grant versus interest earned. For rentals, rental revenue decreased from the prior year, primarily to the forgiveness of the rent at the Edson Medical Center following council direction on April 1st, 25. Now we move into other statements that we will try to explain what the statement is for without going into a great amount of detail. The consolidated statement of changes in net financial assets. This statement shows whether the town strengthened or used its financial capacity during the year after removing accounting items that don't involve cash. The net result was a use of about $133,000, which doesn't materially impact the town's overall financial position. Consolidated statement of cash flows. This statement of consolidated cash flows shows how the town's cash moved during the year. Long-term debt, one of the key highlights is that the town paid down approximately $1 million of debt, which strengthens our overall financial position. Cash resources. At the bottom of the statement, you will see cash resources. These include $22.8 million in cash on hand and balances at the bank. which are available for day-to-day operations. Notably, the portion of this balance was held in a high interest savings account earning prime plus 1.65%, demonstrating active cash management. In addition, the town holds $6.5 million in temporary investments that will mature within 1 year of year end and become available as cash. Schedule 1, Consolidated Schedule of Changes in Accumulated Surplus. This schedule shows the town's accumulated financial history, how we moved from last year's opening balance to this, how we moved from last year's closing balance to this year's closing balance. The first column shows the year's operating results, which appear as a deficit because the public sector accounting standards removes the transfers to and from reserves. The second column shows changes in reserves, which increased about 1.5 million as part of the long-term financial planning. And the third column shows changes in our investment in capital assets, which increased by about 17.7 million as the town contributed to invest in infrastructure. When you combine all three of these changes resulted in an ending accumulated surplus of approximately 169 million, which is 19.3 million increase over the prior year. Schedule 2, Consolidated Schedule of Tangible Capital Assets. Overall, this schedule shows how the town continues to invest in long-term infrastructure while improving the accuracy and integrity of its asset records. The consolidated schedule shows what capital assets the town owned at the beginning of the year, broken down by asset categories such as land, buildings, infrastructure, equipment, and vehicle. It then shows capital acquired during the year, including capital projects that are currently classified as work in progress. As capital projects are completed, they are transferred from work in progress into the appropriate asset category. In 25, approximately 194,000 of work in progress was completed and moved into service as tangible capital assets. Administration is currently improving the quality and accuracy of the asset register. As part of that work, some tangible capital assets previously included in work in progress were written down where costs did not ultimately meet the criteria to be capitalized and were instead expensed. These adjustments improve the reliability of the asset records going forward. One of the most significant figures in this schedule is the work in progress, which sits at approximately 25.7 million. This largely relates to the YCE multiplex project. That balance will remain in work in progress and continue to grow until the project is completed, which is currently anticipated in 27, at which point it'll transfer into service as a capital asset. The next schedule shows the property taxes and provides a breakdown of municipal taxation by assessment category, such as residential and non-residential. You will see that the net residential tax incentive shown on the schedule as a negative amount against the tax revenue, reflecting the impact of the incentive on the municipal taxation. The combined taxation for 25 is approximately 17.8 million. This schedule also includes grants in place of taxes, which represent taxes paid on federal and provincial government properties. It is important to note that the province did not pay the full amount. This schedule only reflects the amount of revenue determined. The province paid only 50% in 24 and 75% in 25. 26 will be the first year the grant is returned to 100%. This schedule is also a good example of how the original budget approved on November 13th, 24 differs from the actual results shown in the financial statements. At the time the budget was originally approved, the town did not have final school requisition amounts, which resulted in an apparent budget to actual variance on the schedule. The requisition amounts were subsequently received and incorporated into the mill rate calculation in the spring, ensuring the final budget was reflecting the taxes invoiced. However, under public sector accounting standards, the financial statements is required to compare the results of the originally approved budget rather than the amended version, which is why the variance appears where we actually address the change in the final version. The next, Schedule 4, is the consolidated schedule of government transfers, and it shows how the grant revenue is broken down between operating and capital, and a further categorization by source funding, local government boards and agencies, the provincial government, and the federal government. Within the local government category is the revenue sharing agreement funds and cost sharing agreements with Yellowhead County, which are reflecting in the operating grants. For 2025, the total operating government transfers amounted to approximately 8.8 million. Total capital government transfers is approximately 18.1 million, which support the major infrastructure and capital projects. It is important to note that the grant will only appear on this schedule as revenue once it has been utilized to offset eligible expenses. Where grant funding has been received but not yet used, it does not appear as revenue here. Instead, is reflected on the statement of financial position or the balance sheet as deferred revenue to be recognized in future years when the related expense does occur. We will show you that detail in Note 8. The next schedule is a consolidated schedule of segmented disclosures. It presents the town's financial results by department rather than in a consolidated format. I personally find this schedule easier to interpret than the statement of operations on page 2 because it shows the unfunded amortization as a separate line. This provides a clearer picture of the operating costs of each department. You will see at the bottom of general government, the first column is where the property tax revenue is recorded, and as a result, this area shows a net surplus of approximately 17.7 million, which is used to support other tax-supported departments that are appropriately reflecting a deficit position. The environment area is a self-supporting department. User fees fund that function and reflect the overall surplus of approximately 3.3 million. It is important to note again that under public sector accounting standards, transfers to and from reserves are excluded, which differs from our quarterly management reporting that we give to council. Finally, unfunded amortization is an analytical tool that allows us to compare whether our annual contributions to reserves are reasonably aligned with the rate at which we use up our assets through amortization. We contributed 6.75 million to reserves versus 5.7 million in amortization. So we're comparable. This helps ensure that we're setting aside funds over time for future replacement of assets rather than deferring costs to future taxpayers or users. Schedule 6 is the consolidated schedule by expenses by object. It groups costs by type of expense rather than by department, and this allows council to see how spending compares to budget across the major categories. Overall, salary, wages, and benefits were below the approved budget, reflecting vacancy management, recruitment timing, and cost control throughout the year. Spending on contracted services was also lower than the anticipated budget, which reflects both improved internal capacity and careful management of external service use. The line item purchased from other governments primarily relates to the town's RCMP contract, and this is an area of good example where the budgeting accuracy continues to improve over time. RCMP costs are estimated in advance by the federal government using multiple variables, including approved staffing levels. The town is then invoiced quarterly based on full complement and estimated, and with a true-up completed the following year once the actual costs and positions are finalized. Because the federal government's fiscal year differs from the town's fiscal year, There's an inherent timing difference that can create variances. Administration continues to refine the town's budget assumptions to ensure future RCMP costs more closely reflects the expected actuals. In addition, the town proactively set aside a percentage of funding to support future collective RCMP agreements, consistent with the federal guidance, to reduce financial pressures when the agreements are finalized for their future collective agreement. To date, 2% was set aside for 24 and 3.5% for 25. The next few pages are our significant accounting policies, which we have not highlighted anything. There is relatively no changes from last year on this, and therefore we will move to page 16, and I will pass it to Kelsey to talk about note 3, which is accounts receivable.
Perfect. So note 3 shows that breakdown you were looking for accounts receivable, as shown on the statement of financial position. So within that increase in the total accounts receivable, a large portion of that is coming in the trade and other receivables category. That notable increase from 2024 includes with 2.28 million of it is due to the YCE project. An additional $150,000 of the increase is related to fines receivable following a change in accounting procedure in which the fines are now being recorded on an accrual basis, which essentially means we're recording the fines for the revenue from enforcement fines when the tickets are handed out versus when we're receiving the cash for them.
So just a question on that. So just to clarify my understanding then, so with YCE, because we are working with our partners at Yellow County, we are billing them and then there's a delay. So that's why it's showing as a receivable of how much was it?
2.28 million.
Okay, so that's impacting our cash flow then.
Correct.
Okay.
I would clarify that not all of that would be Yellowhead County. Some of that would be representative of grants we're waiting to receive.
Oh, like
the ISIP grant.
Okay, perfect. Thank you.
So also on this page, we're going to look at note 7, which is a breakdown of the accounts payable balances, also shown on the statement of financial position. So the accounts payable and other payables specifically has a notable increase from 2024, which is again due to the YCE project. This is due to the main contractor bill for December construction that was paid in January 2026, but the expense gets recorded to 2025 when the work was related to, and that was $1.7 million. This is simply representative of timing differences between the year the costs are related to and when the invoices are due for payment. Also within this is construction holdbacks, again, primarily related to YCE. Holdback amounts for the project for YCE are paid out following the completion of each calendar year. Within that balance, there are also less significant holdback amounts related to other in-progress projects, but the majority of it is YCE. And I'll pass it back to Denise to go through deferred revenue.
Thank you, Kelsey. As we mentioned earlier, the deferred revenue note is laid out clearly to show how the grant balances change over the year. For each grant, the note shows the opening balance, the additional contributions received during the year, and the amount recognized as revenue. For programs such as MSI, the additions include interest allocation, which was added to the deferred balances until the funds are eligible to be used. Grant revenue is only recognized when it is used to cover eligible expenses. At that point, the amount is moved from deferred revenue on the balance sheet to revenue on the statement of operations or the income statement for annual reporting. If the funds are received but not yet spent on eligible costs, they remain in deferred revenue and carried forward to future years. Other deferred revenue amounts include smaller local donations as well as revenue prepaid for 2026 operations, including the Weyerhaeuser donation for YCE, a donation for Vision Park trees, and local businesses for the fire training grounds. On the next page, I'll pass it back to Kelsey for the asset retirement obligations note.
So asset Asset retirement obligations represent estimated future costs to retire or remediate assets at the end of their useful life. These amounts are unfunded liabilities, meaning they are not cash set aside today, but they serve as an important planning tool. When projects proceed in the future that include remediation of these assets, the project themselves will be funded through reserves and/or grant funding. An ARO helps administration and council understand the long-term cost of owning assets, including required remediation or decommissioning, so these costs are not a surprise in the future. As of year end, at the bottom of this page, the town has identified approximately 11.1 million in asset retirement obligations, which are reflected on the financial statements. During the year, additional potential obligations were identified related to the YCE multiplex project, as well as some smaller assets. However, these amounts were based on internal estimates only and have not yet been supported by sufficient or external contractual certainty. In addition, these potential obligations are expected to be addressed through the course of construction of YCE plus other planned capital projects and completed prior to the end of 27. Therefore, rather than resulting in a long-term retirement obligation. As a result, it was determined that these additional estimated amounts should not be recorded in the financial statements at this time and were instead included on the summary of unadjusted differences pending future adjustments. I'll pass back to Denise to go through our debt limit.
Note 11 is the town's debt limit has increased approximately 58.9 million. At year end, the town has 8.1 million in outstanding debt, which represents only 14% of the total debt limit. This indicates the town is currently well within its allowable borrowing capacity. It's an important measure, particularly as the town is planning to utilize debt financing for upcoming strategic investments, including the aerial fire truck, YCE multiplex, the Township Road 532, water degas, and A6 sanitary. The debt service limit reflects how much annual debt repayment the town can afford based on its revenues, and the town debt service limit is approximately 9.8 million, of which current annual debt servicing is 1.1 million. This means the town is utilizing only 12% of its debt service limit. Together, these indicators demonstrate that the town has significant capacity to take on additional debt while remaining well within the legislated limits and maintaining financial stability. On note 12 is our restricted surplus. This note shows the town's reserve balances have increased from approximately 38.4 million in 24 to 40 million in 2025, reflecting continued focus on financial sustainability and long-term planning. Included in this total is 2.6 million related to the West Yellowhead Regional Waste Management Authority, which is consolidated into the town's financial statements in accordance to accounting standards. The note also clearly breaks reserves down by category, including restricted reserves, operating reserves, capital reserves, which help illustrate the purposes and intended use for each reserve. In addition, I can probably answer the question now that was regarding utilities. So it shows up here as utility versus environment. So it says utilities 25 has operating reserves of 57,416, and utilities has 1.4 million as capital for their own reserves. You will notice the negative balance of the off-site levy reserve. This reflects infrastructure that has already been constructed using those funds and will be repaid through future development. We will now move on to contingency note that we mentioned earlier. This is page 23, note 18. Contingencies are situations where the outcome is uncertain and may result in future financial impacts. The town's contingency note includes membership in the group insurance exchange called Munix, which manages shared insurance risks with other municipalities. Designated industrial property assessment appeal was included, which affects assessments over multiple years and may result in future adjustments. These items may or may not result in costs, but they are disclosed for transparency and awareness. Under commitments, notes on the next page, commitments are agreements the town has already entered into that will require future payments for affect future income. The commitment note includes a 5-year rental agreement with Edson Medical Center Corporation, funding commitments to various nonprofit organizations that support community services, the non-residential tax incentive program. The long-term agreement with West Yellowhead Regional Waste Management needs to be disclosed due to consolidation. Their long-term agreements include A4 Consulting Services as well as GFL Environmental. These are planned and approved obligations, even though the costs occur in the future years. The next note we want to bring to your attention is on page 25, the franchise and concession fees. You will see an increase in revenue related to Yellowhead Gas Co-op in 2025. This increase was due to the equalization of the gas rates between the two gas providers. For ATCO Gas, consumption in 25 was higher than the prior year. With respect to Fortis Alberta, the electricity franchise declined in 2025. However, the town has introduced an increase to the franchise fee rate for electricity effective 2026. With that, we are open to any questions you might have on the financial statements.
Thank you, Ms. McDonald, Ms. Schmidt, for your presentation this evening. Council, we will open the floor to questions. No questions. See? Got it all covered. Before we go into closed, do our auditors have anything that they want to say publicly?
Nope, covered it very well.
All right, thank you. Just a matter of process. I think we probably should go into close to talk with the auditors first before we accept the financials. So can I get a motion, please, to go into closed session? Go ahead, Councillor Pizicny.
Yeah, we move into closed session pursuant to Section 281 of the Municipal Government Act and Section 30 of the Access to Information Act.
Thank you, Councillor Pizicny. All those in favor? That motion is carried unanimously. All right, we will resume into open session just for administration. We came out of close at 8:29, moved by Councillor Taylor, with everybody in favor. So we will hand things over to our auditors just to review a couple items in the financial statement. Go ahead.
Sure. So yeah, the next step would be to go through what we call our audit findings. Essentially, that's just a way for us to bring to your attention anything that we think is relevant from an audit perspective outside of the numbers. So Denise talked about the actual financial statement numbers themselves, and the audit findings kind of talks about everything else. So with that, I will pass it over to Callie to kind of go through that document.
Perfect. Thanks, Benji. I'm just going to share my screen and I will bring it up so you guys can all see it as I run through it. All right. So I believe you guys can see it on your end now. Is that right? The audit findings?
Yes, we can.
Okay, perfect. So I'm going to start on engagement status. Where are we at today? So we have essentially completed our audit and we're prepared to sign our independent auditor's report subsequent to the completion of the following. So receipt of the signed management representation letter, discussion of subsequent events with council, and then council review and approval of the consolidated financial statements. And I'm actually going to pause right here and we can do the subsequent events discussion. So is anyone aware of any subsequent events that have occurred since year end that we should be aware of for audit purposes?
No, we have not.
Perfect. So independent auditors report. We will release our independent auditors report today, April 21st, 2026, following signatures. And our report will have an unmodified opinion, which essentially means it's a clean audit opinion. So significant audit, accounting, and reporting matters. There has been 2 changes from the previously presented audit service plan. The first one is in regards to overall materiality, which has increased to 2.3 million. And then the next is accounts payable, accrued liabilities, and asset retirement obligations have been identified as significant risk areas. Final materiality for the audit is 2.3 million, up from 1.7 million last year. No fraud was detected during the audit. Nothing has come to our attention to suggest any non-compliance with laws and regulations. And then no significant matters have arose during the course of the audit in regards to related parties with the town. Going concern, we have not identified any uncertainties related to the town's ability to continue as a going concern. The accounting policies and accounting estimates used by the town are appropriate and have been consistently applied. Disclosures in the notes to the consolidated financial statements are clear, neutral, and consistent. We have detected one significant deficiency in internal controls, which I'll go over just a minute in Appendix B. And then we'd also like to formally acknowledge the cooperation and assistance we receive from all the management and staff at the town. And just throughout our discussions, no significant matters were discussed that we feel like we need to bring to your attention. So significant risk areas. Throughout our audit process, we've identified 5 significant risk areas. So management override of internal controls, asset retirement obligations, accounts payables and accrued liabilities, the remuneration schedule, and then lastly, tangible capital assets. Throughout all of our audit testing, nothing of significance have come or popped up related to any of these areas during our testing. We do have one comment on the remuneration schedule, which I'll discuss in the appendix. So auditor independence, we confirmed to council that we're independent of the town. Management representation, a letter will be provided to management for signing, and this just states that they provided all information to us throughout the audit process. And then lastly, summary of significant differences. In the appendix, we have a summary of all the significant unadjusted differences that were identified. So Appendix A is significant deficiencies in internal controls. So this is the one deficiency we noted is in regards to the remuneration schedule. So during our remuneration schedule testing, it was noted that the schedule did not have the appropriate review and approval. Because the schedule is a significant risk area, there needs to be a control in place to mitigate that. I will note though, through our discussions with Kelsey, she did review the listing. There was just no physical sign off. So for audit purposes, we couldn't corroborate it. And management has already plans to rectify this for next year. And then Appendix B, so this table goes through the summary of significant differences. So these are adjustments that are not reflected in the financial statements. We've kind of added up and compared to overall materiality. Several of these, I'll kind of go through them line by line. Several of these have already been kind of talked about or addressed by Denise and Kelsey throughout their presentation. So first one is to record possible extrapolated overstatement of amortization for $242,000. So when we did our amortization testing, we noted a variance on one of our tests. Because we've noted it in our test, we extrapolated out over the entire TCA population as a potential error. Next one is in regards to AROs. So it's to record the SUD for the impact of unrecorded ARO balances. So like was already mentioned, there was a few AROs relating mainly to the YCE multiplex that haven't been picked up in the financial statements. So we've just taken those balances to SUD as an unadjusted difference. Next one is to take the difference between the estimated and the actual allowance for doubtful accounts recorded as SUD. So there's two properties identified on the property tax receivable listing at year end that hadn't been collected, that we have just allowed for, and they total 180,000. Next adjustment is regards to the opening impact of the 2024 fines receivable balance that was picked up in 2025 for 164,000. And that's just a timing difference with the change in the accounting policy of how it's being recognized going forward. To record the overstatement of amortization for negative net book value in capital asset continuity for 248,000. So there was a few tangible capital assets were over amortized during the year. And then the last adjustment relates to the SUD for reduction to assessed value of property taxes. So this is just in regards to the reduction to the assessed property tax values that is going through the court process. And this 224,000 reflects the part that has not yet been picked up in the statements. And then the last two lines here just total up everything together. And then it brings in the opening differences from the SUD adjustments from last year. And then, so the total of those comes into the top of this next little table. And then we compare to overall materiality to show that overall these differences are insignificant and don't materially impact the statements as a whole. And that is the audit findings.
All right, thank you very much for your presentation and your work on the 2025 audits. Also to Ms. McDonald and Ms. Smith and the rest of the finance team. Appreciate your hard work. Council, do you have any further questions, comments, concerns for either our finance team or for our auditors this evening? Seeing none, I will take a motion to accept the audited consolidated financial statements. Go ahead, Councillor Pisichny.
Motion one, correct? I'll move that council approve the audited consolidated financial statements for the year ending December 31st, 2025 as presented.
Thank you. Any further comments? Seeing none, all those in favor? That motion is carried unanimously. Thank you very much. Have a good evening.
Great. Thank you very
Anything
much.
else? Thank you.
Thanks, everyone.
Ms. McDonald, do you have anything else? Or you're all good? Perfect. Awesome.
All right. Okay. Have a good night. See ya.
Can I get a motion, please? We'll move on to councillor committee reports. Before I take a motion, is there anything? Oh, sorry. Go ahead, Councillor Holden. Okay. Is there anything anybody wants to highlight in their council committee reports? Or is there any questions about the council committee reports? Seeing none, I'll take a motion, please. Councillor Holden.
I motion that council accept the April 21st, 2026 council committee reports as set out in attachments number 1 through number 7 for information.
Thank you, Councillor Holden. Any questions, comments, or concerns? Seeing none, all those in favor? That motion is carried unanimously. We have no information items, and my agenda notes just closed on me. We do have a notice of motion. I'm just going off the fly here, so I'll hand things over to Councillor Wilson-Lear.
Thank you, Mayor Zahara and administration. I would like to move that council direct administration to bring forward a report outlining options, costs, and timelines for a mill and overlay program before the 2027 budget process. Can I go ahead and speak to that motion?
You can speak to that motion.
Thank you. At the April 14th, 2026 Committee of the Whole meeting, Council received information regarding the town's approach to road maintenance and long-term roadway investment planning, with a clear focus on advancing a data-driven road maintenance program supported by asset management principles and updated condition assessments. Over the past several years, the town has invested in maintenance equipment and activities such as crack sealing, pothole repair, and asphalt patching. These efforts not only extend the life of existing infrastructure, but also generate valuable operational data, which provides insight into unit costs, productivity, material requirements, and staffing. This forms critical foundation for a more structured and sustainable maintenance program. With the most recent road condition assessment completed in 2020, updated data will play a vital role in refining priorities and aligning roadway investments with both surface and underground infrastructure needs. While current efforts are still focused on targeted repairs and rehabilitation, it is important that Council also consider longer-term life cycle strategies to ensure the most effective use of taxpayer dollars. For this reason, it is prudent that a potential mill and overlay program be developed in parallel with the road maintenance program. Advancing this work concurrently will ensure that all practical roadway strategies are evaluated together and integrated within the town's asset management framework, rather than considered in isolation at a later stage. This would serve as a fiscally responsible plan, not a reactionary one. Providing direction to bring forward a report outlining options, associated costs, and implementation timelines for a mill and overlay program will position Council to make informed, timely decisions and ensure a coordinated strategic approach to roadway investment. In addition to this information provided and the data-driven direction this Council and administration are supporting in terms of enhanced data tracking, transparency by assessment and research of such data, and tracking for the public and aligning the asset management frameworks with public engagement data in 2025, pushing for road and other infrastructure focus, I believe a parallel mill and overlay program will further assist support for risk-based proactive decision-making and also supports prioritization through data and the rating system. And I think I'll leave it at that, and thank you for considering that motion.
All right, thank you. Are we able to get the motion on the screen, please? All right, so the motion on the screen says that Council direct administration to bring forward a report outlining options, costs, and timelines for a mill and overlay program before the 2027 budget process. Just a question through to administration. On the notice of motion, is this, I thought the idea with the notice of motion is this was to give us a heads up and then for us to have a discussion at a future council meeting. Can you clarify, Councillor Beveridge? Or sorry, CO Beveridge? Gonna give you a promotion there.
Thank you. A well-deserved promotion. Yes, so council, this is just for your awareness at this point. This will come back on May 5th, the next regular council meeting for council debate.
So we won't debate this motion. We'll just call the question then. All those in favor? That motion is carried unanimously. Thank you. Can I get a motion, please, to go into closed session? Go ahead, Councillor Taylor.
Sorry, through the mayor to the mayor. When you say call the question, you're calling the question of the notice of motion? Is that motion?
That was on the floor.
Looking here. Yeah.
Sorry. Go ahead, CO Beveridge.
Mr. Mayor, thank you. So that was strictly just for notice. There was no requirement for a vote for that item. It's just strictly for council's notification that that item will be on the next upcoming agenda for council to vote, to debate and vote upon.
Okay, so there was actually no vote on that.
Correct.
All right. We'll strike the vote from the record.
Okay.
Yeah.
Do that? Okay. All right.
Okay. That is very confusing as the chair. Go ahead, CO Beveridge.
To be fair, through to council, we would not ever show the motion on screen. Essentially, it's just for the council member to have the opportunity to put a motion on the agenda for further deliberation and debate. So,
I think we've done 3 of these in my time here, so.
Mr. Mayor, to be fair, there's been very limited in
Yeah.
this organization.
Good call, Councillor Taylor.
Yeah, through the mayor. The only time we did it, I think, was we waived that notice of motion. I think we did that. So, okay, are we moving on to our next item? Are you satisfied with that?
Sure.
All right.
All right.
Sorry, I'll get my glasses on. I move that the meeting move into a closed session. I move that the meeting move into a closed session pursuant to Section 29 of the Access to Information Act.
We do vote on this. All those in favor? That motion is carried unanimously. Thank you, everyone. All right. Thank you, everyone. It is 9:54, and I will adjourn this meeting. Thank you.